JP Morgan is the standout performer, Alexandra. You think that's in some way akin to the performance of the bank and its stock more broadly?
Yeah, well, thank you so much for having me on, Caroline and Ed. But its performance is incredibly strong in terms of its AI maturity. It's head and shoulders above other banks. It was early to the game. Jamie Dimon made AI a focus for the bank 6 years ago, where he made clear that it was going to be an AI-first organization. And from that followed a lot of initiatives like establishing a research lab, doubling down on hiring AI talent, reorganizing the exec team. And that really has paid off. And you see, well, according sort of to our measurements, you can see that they sort of really stand out against other banks and are incredibly strong on AI capabilities.
I'm proud to announce 5 major actions to continue to relieve student debt for more than 30 million Americans since I started my administration. First, my administration will propose a new rule to cancel up to $20,000 in runaway interest for any borrower that owes more now than when they started paying the loan. It's a big difference. And for low and middle class families enrolled in my SAVE program, we'll cancel all of your interest, Second, we plan to cancel student debt for borrowers who still owe student loans even though they started repaying them more than 2 decades ago. Folks, third, we plan to cancel debt for about 2 million borrowers who would be eligible for debt forgiveness through the SAVE program, public service loan forgiveness, or other debt canceling programs, but are not enrolled in these programs. Some of you are only finding out after the fact, as you're a teacher, a firefighter, a cop, that you qualify, but you just didn't know about it before. And now but you're eligible no matter how long you've been out of the program. Fourth, we plan to cancel debt for borrowers who the Department of Education determines were cheated by universities that left students on unaffordable loans and delivered little in benefits to students. And one of those colleges was closed. I won't mention it. And finally, the Department of Education will propose a new rule to cancel student debt for Americans facing financial hardships, from child care to health care, to prevent them from paying back their loans. And over the coming months, the Department of Education will propose and then implement these plans. And starting this fall, we plan to deliver up to $20,000 in interest relief to over 20 million borrowers and full forgiveness for millions more.
As of the time of this video, Sofi stock is up 1.12% and trading at around $7.20. This came after the bank announced that it'll act as the sponsor bank for Rapid Finance's new line of credit prepaid cards. The new card, Rapid Access MasterCard, will be managed by Galileo, which Sofi acquired in 2020 in a deal valued at $1.2 billion. This announcement couldn't have come at better timing, as Sofi stock has been struggling lately, thanks to the company announcing the pricing of $750 million in convertible senior notes. But there's more to Sofi's woes, as the Biden administration announced plans for more student loans cancellations, and being a company that depends on student loan refinancing, this was nowhere near great news for Sofi. Yet, despite all of this, institutional investors like Raymond James and Cathie Wood's ARK Invest are betting big money on Sofi stock and increasing their price targets. So, what are they seeing in the company? Should investors follow suit and ignore the red flags? Let's find out. But before we do that, if you want to keep up with Sofi's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Folks, I will never stop to deliver student debt relief on hardworking Americans. Tens of millions of people's debt was literally about to get canceled. But then some of my Republican friends and elected officials and special interests sued us, and the Supreme Court blocked us. No, I mean it sincerely. We continue to find alternatives paths to reduce student debt payments.
The White House announcing an additional $7.4 billion in student loan debt bailouts today, bringing the total amount of student loan debt transferred to the taxpayers to a whopping $153 billion, impacting 4.3 million borrowers.
Meanwhile, inflation's exploded since Joe Biden took office, now costing Americans an extra $1,000 per month on average.
Woo. Here with reaction, Forbes media chairman and editor-in-chief Steve Forbes, along with FreedomWorks chief economist and Committee to Unleash Prosperity co-founder Steve Moore. The Steves, welcome to the Bottom Line. Welcome, welcome, the Power Panel. All right, Steve Moore, I'm going to come to you first. Again, I think Joe Biden, he sees he's failing with the youth vote. He's trying to buy them off, but they're having a hard time launching, whether it's with homes or seeing the cost of a car or food. They're saying Joe Biden and Joe Biden's economy doesn't work. I don't think you can buy them off with student loan debt relief.
Is that for me or Steve Forbes?
Steve Moore.
Okay. Steve, it's great to be with you, by the way. He's my hero. Listen, I think this was a terrible week for the Biden campaign and the Biden presidency because many of your friends on Wall Street had felt like inflation was going away. By the way, I've been saying on your show for week after week after week that inflation is not going away, that it's actually rising again. And that's exactly what these new statistics showed. And you're exactly right. For middle-class families, they're just getting hammered by this. And that's why 2/3 of Americans keep saying over and over again that they don't feel that they're better off under Biden. They feel that they're worse off. And on the student loan thing, I mean, this is just infuriating. I mean, you're talking about people with graduate degrees, that are getting debt relief from people who are a trucker or a plumber or a nurse. I mean, how in the world is that fair to anyone? $150 billion down the toilet. You'd think we were running a budget surplus, not a $1.5 trillion deficit.
Earlier this month, the Biden administration said that it would cancel student loans for another 206,000 borrowers as part of a new repayment plan that offers a faster route to forgiveness. This cancellation was announced by the Education Department, which claimed that people can be eligible for student loan cancellations when they hit 10 years of payments, a new finish line for some loans that's a decade sooner than what borrowers faced in the past. This immediately raised red flags for SoFi investors because it could affect the company's business model and consequently its stock. Remember, this is a company that filed a lawsuit against the Biden administration last year to block the student loan payment pause, so the impact of more debt cancellations on its business shouldn't be ignored. Hello everyone, and welcome back to Investocracy.
Let's get to Jim and stop trading.
The most popular stock on Mad Money is SoFi. And Needham comes out today with a piece saying, listen, $10 target, that things are getting better there. It's Anthony Noto. That's a great relief to people who are concerned that perhaps there was a convert that was done that issued a lot of stock and really crushed it. So maybe this is the comeback, I hope.
Yesterday, you said that you thought we were at a pivotal moment.
Yeah, I just think that the interest rates are just still not going on. We got to wait to see what we have on employment, but I don't really trust things here. I just don't trust them yet. Still overbought.
B of A had a great table last night looking at years in which S&P's up 10 plus end of March. Every year except 87.
It was good.
You add more.
And it can happen, but we got to shake this off. I keep thinking about what Steve Cohen said, AI, and hoping that people realize that you can stop selling NVIDIA. You can stop selling the ones that are related to AI. AI's been terrible so far in the last few days. But, it's soggy. Market's soggy. I like the fact that Nucor's up. We've been having an industrial sell-off, and maybe that's a good sign.
SoFi is a company that has built its name on helping people manage and refinance student loans, and more cancellations would probably mean fewer federal student loans being refinanced. Because who'd refinance a $0 loan? This would directly hit SoFi's student loan business, lowering the demand for its services and shrinking its loan portfolio. With a reduction in the amount of student debt outstanding, SoFi's revenue from interest payments and loan origination fees could decrease, and this would negatively impact the company's profitability, especially if it didn't have alternative revenue streams to compensate for the loss. Additionally, if a large chunk of debt disappears, SoFi might lose out on potential customers. But it's not entirely too bad, because those customers who no longer have to worry about student debt could use their money for investing or taking out a mortgage, and these are also two products SoFi offers. In fact, many analysts still think SoFi will be the next financial giant, and that its journey from being a student loan specialist to a comprehensive financial services company, then to a bank, has been extremely impressive. So, let's talk about the institutional giants betting big on SoFi stock despite all of the headwinds, and whether you should follow suit and buy SoFi too. But before we dive into the details, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with SoFi. That said, back to the video.
It is time for Under 30. We take a look at SoFi Technologies, of course, the stock ticker SoFi, as the stock is making a nice move today, up about 4%. Joining us now, senior markets correspondent for the Schwab Network, George Tillis. George, what's going on? What's behind this move here? This is a notable 4% jump in the stock.
Yeah, I mean, if you look at SoFi, we've talked about this one. Obviously, the stock is generating additional customers from the standpoint of digital banking, insurance services, other financial services, including consumer loans and even auto loans, because SoFi, traditionally, as we know it, has been a student lender for academic loans or college loans. But effectively, they've been expanding their businesses. Also, obtained a bank charter about a year and a half ago. But one of the challenges we talked about with this particular name is it's been expanding quite aggressively, and it's been expensive to do so. Now, if you look at the call today from Needham, they actually initiated coverage on SoFi at around $10 per share. And they are actually making a call based upon the expectations that SoFi, based upon the growth of users across their multiple platforms, will eventually get it right from the standpoint of getting closer and closer towards profitability, which they are. As we talked about, this particular year, they're expected to have a full year of profitability of 6 cents per share versus a loss of about 35 cents last year. So we talked about how, a lot of these companies, especially in the fintech space, I'm going to put SoFi not necessarily in the fintech payment processing space. They do, of course, have a company called Gemini, which is a separate electronic payment processing company. But at the same time, it's been growing its business. Overall sales have been in the double digits, but the challenge for SoFi has always been, issuing shares to continue to expand its business offerings or its product offerings has been relatively expensive. But if we start to see a little bit of a decline in interest rates, that actually might be a good thing from the exposure that SoFi has, especially in the personal and consumer loan space.
SoFi's story started in 2011 with a focus on student loan refinancing. Back then, student debt was growing, and SoFi saw an opportunity to offer better rates and terms to graduates drowning in loans. SoFi's focus on technology and a user-friendly experience resonated as it made refinancing student loans faster and smoother, attracting a growing customer base. But they didn't stop there. Soon, SoFi expanded its offering, adding things like mortgages, investing tools, and even career coaching. This diversification strategy fueled the company's growth, as it wasn't just about student loans anymore, rather it was becoming a one-stop shop for all financial services. Analysts at Raymond James are firm believers in SoFi's story, as the bank recently bought 32,345 shares of SoFi, adding to its existing position in the company and bringing its total holdings to approximately $3 million worth of shares. In addition to Raymond James, Genio's Wealth Management recently bought 2,900 shares, indicating its bullishness on the company. But one of SoFi's biggest backers is Cathie Wood's ARK Invest. Last month, Cathie bought 1.9 million SoFi shares after the stock dipped when SoFi announced the $750 million notes offering. She also bought more shares recently, pumping SoFi up and making it ARK's 30th largest position, at the same time that she continues to sell shares of companies like Coinbase and Nvidia, selling positions worth $824,000 and $135,000 in Coin stock and Nvidia stock, respectively, believing that now is a good time for profit-taking. So, why are institutional investors still betting on SoFi despite the company's recent woes? We must admit that, while this recent turn of events can have a detrimental effect on SoFi, there's a silver lining somewhere. Cancellation wouldn't eliminate all student loan debt. Private loans, for instance, wouldn't be affected. So, while the federal loan pool might shrink, SoFi could still focus on refinancing those private loans. More importantly, SoFi has been diversifying its offerings. The company is constantly expanding its financial products and services, and this means that even if student loan refinancing takes a hit, their other ventures could pick up the slack.
With today's announcement, the White House says 4.3 million Americans can now claim some amount of federal student debt relief, to the tune of $153 billion.
We are past the point where 1 in 10 people who have student loans have had their loans discharged.
But 18 Republican-led states are now suing to stop those efforts.
The president is simply shifting the burden to those individuals that paid off their student loans or worked their way through school or chose to take a career that didn't require a four-year education.
Education Secretary Miguel Cardona defends the administration's plans, as critics say the White House's efforts amount to a bailout for people who took out federal loans they couldn't pay back.
Are you telling me that these are the people that are getting bailouts? These are people that are public servants. We're fixing a broken system, and we're proud of it.
The administration's strategy lets borrowers pay nothing back until they reach a certain income level. It also eliminates interest growth, lowers payments more than past plans, and cancels unpaid debt in as little as 10 years.
We want to help as many people as quickly as possible with as much debt relief.
Critics also accuse the White House of using debt forgiveness to score political points with younger voters, a demographic more likely facing high college costs right now.
Student loan cancellation is not going to do anything to solve the systemic issue of massive student loan debt.
The Supreme Court struck down the administration's first attempt at student loan forgiveness, but Secretary Cardona believes their current approach is sound.
We are making significant progress, and we laid the foundation for this to continue to happen based on the rules that we're putting in place.
For SoFi to be able to adapt in a no-student loan landscape, the company can invest into promoting other services like loan refinancing pivot and investment and wealth management. Not only that, but even without federal student loans, there's still a massive market for refinancing other types of debt, like mortgages or personal loans. SoFi could leverage its expertise in managing loan repayments and competitive rates to become a one-stop shop for all refinancing needs. According to the American Bankers Association, mobile apps are the preferred means of taking care of banking-related business for 48% of U.S. consumers, while online banking is the second most preferred option at 23%. This trend will definitely continue as younger, digitally native consumers age, and SoFi's easy-to-use online platform would definitely help it capitalize off this growing shift. For this reason, SoFi could position itself as a partner in helping people grow their wealth after shedding student loan debt. It's no news that SoFi isn't shy about innovation, so it could bring in new banking products or new partnerships like this one with Rapid Finance to attract more users. The company's partnerships with sports leagues like the NFL and the NBA are also very impressive and extremely useful for marketing and for the company to gain brand recognition. Keep in mind that the US will host the next World Cup and the 2028 Summer Olympics, and SoFi Stadium will definitely be used for these events, which could increase SoFi's brand awareness to a global audience, opening the door for the company to expand globally. It's important to remember that these are just a few possibilities. The future's always a bit foggy, but SoFi has a proven track record of adapting and innovating. Even in a world without student loans, they have the tools and experience to carve out a successful niche in the financial services industry. SoFi's diversification and focus on other financial products could help it weather the storm. And while a student loan cancellation might throw the company a curveball, it's unlikely to knock it out of the game. It will be interesting to see how SoFi adjusts, pivots, and maybe even comes out with new and exciting financial products and services. But for now, it's unlikely that this loan cancellation news will be a deal-breaker for this financially savvy company. But what do you think? Will the cancellation really have a huge impact on SoFi? Let us know your thoughts in the comment section. If you would like to know more latest updates about SoFi and what it's been up to, then go ahead and click on the next video on your screen. See you